Well, thanks for tuning into India Market Close. I'm Niraj Shah, and let's take stock of what the markets are done in the session today. Well, the banks have really led the markets higher. 0.5% up for the Nifty. But if you look at the Nifty Bank, 0.84% courtesy HDFC Bank. You have to give credit where it's due. Today it's HDFC Bank driving the upside in the indices today. 2.67% higher for that one. Mid caps and small caps will come up on your screen. The last 3 days of the month, or the first 3 days of the month of April, mid caps and small caps have driven the rally. In today's session, mid caps are certainly a lot more quiet than the small caps, and small caps are in tandem with the large caps literally. But you could argue that if you look at the weightages, you will see that HDFC Bank is driving the largest chunk. Otherwise, it's not that all the large caps have done really well in the session. In fact, a clutch of stocks are off from the highs of the day. But bring up the heat map for you and show you what's moving and what's not. Well, like I said, a few reds despite the fact that the indices are doing what they are doing. So a bit of a corrective move in ONGC. On expected lines. Reliance is a bit better than ONGC, you have to admit, because of this whole windfall tax issue or otherwise. Shriram Finance down about 1.7. Some weakness in BPCL, some weakness in Adani Ports in the session today. But the gainers, HDFC Bank, Asian Paints up 2.5%. Tech Mahindra up 2.5%, iShares up about a couple of percentage points, and LTI up about a couple of percentage points. So IT is certainly right up there along with Asian Paints, along with HDFC Bank rather than Asian Paints, giving that bit of support to the markets. Broader end of the spectrum, mid caps a bit flattish, Tamanna.
Yeah, they have been, but some great stories there individually. I was interested to see IT and banks both really doing well today, but you know, that banking sort of buzz doesn't just end with an HDFC Bank. Remember, you've seen business updates coming, and this is looking like it's going to be a decent quarter for the banks and the smaller ones as well. So in the broader end of the market, I'm going to pick up a couple of complete stunners. Ujjivan Small Finance Bank, Suryodaya Small Finance Bank, Suryodaya, something that Niraj picked this morning, and look at the kind of run-up we've seen, about 10% right now, 9.5% on Suryodaya, and Ujjivan also 6.5% up. The other interesting story this afternoon would be from your specialty chemical space, so alkyl and Balaji amines. And if you pull that up, so that's a specific chemical used in producing pharmaceutical products, and both these stocks are up for a couple of factors. One, because we've placed duty imports on any of these products coming into the country, so good for domestic players like these two. The Taiwan earthquake has impacted one of the largest producers in the world, so sentimentally also good for these two, and you're seeing that complete buzz in that space. More biz updates, and not everything has been positive when it comes to business updates. Dabur has been having a sluggish day, and their business updates also talk about how there is going to be a pain point for a Dabur continuing. So sluggish Q4 demand, only 4.5% down on Dabur. You must have spotted KEC on your screen there, and KEC is definitely the next one. I would say it was stock of the morning and has continued fairly strong. About 800 crores worth of orders were announced yesterday, and that order win buzz has continued for that stock. I just wanted to pick up Angel One. The business updates came this morning. It saw a huge spike yesterday. It was up this morning as well. It seems to have given up its gains. So Angel One is the other one that I would point out. So a few standout stories, but I would say, Niraj, all things considered, Indian markets are not having a bad day at all. And IT for a second day in a row continues to be a great story. Of course, the headliners are the banks.
And HDFC Bank in particular. And when you have IT and HDFC Bank doing so well that they are, difficult of the markets to come off in the session. Jai Bala, founder and chief market technician at Cashthechaos, joins us right now on the show. Jai, good having you. Thanks for joining in. What do you make of this move today, albeit over the last few days, wherein we've seen the broader markets and particularly the small caps do much better than what the large caps have?
Hi, it's good to be here. The markets are seeing volatility, and if you've noticed, the markets from the beginning of the year haven't managed to cross the 3% mark on a year-to-date return, and every new high is getting pushed back to the previous range. So that's not a positive sign, but it's more like a limiting sign. The markets probably have got a little more higher highs to come through, somewhere close to 22,600 to 22,700 mark. But I think we are near the fag end of the move. when it comes to the smaller names, the mid caps and the small caps and the micro caps, the small caps and the micro caps, yes, they're looking more like markets that stopped and seeing a counter trend bounce rather than start of a fresh move. I could be wrong, but the mid caps are more buoyant and more promising than the small caps and the micro caps. So that's the bottom line. So be a little more cautious. I think we are at the fag end of the move, and the global markets too. Just need the Nasdaq alone needs a little more higher highs to complete. And if any of the indices, the three major indices, were to break the March 15th low, I think that will mark the end of the rally that we have seen from October.
Yeah. Good afternoon, Jay. Tamanna here. And, the other big story, of course, is what's happening with the banking pack. Just fantastic. I'll come to you on those levels, especially for HDFC, etc. in a bit. But I want to start by asking you, what is on your list? What is on your radar this afternoon?
Okay, I have two names actually. I'm one bullish and one bearish. I've been positive on oil marketing companies, more the smaller ones than the bigger ones. I'm bullish on Confidence Petroleum and also IG Petroleum. But Confidence Petroleum is my pick now. I'm having a stop at about 82. I'm expecting it to cross fresh 52 highs past 125. So on the negative side, I have from the banking space, Kotak Mahindra Bank. It's been a huge laggard for the last 3 years, and it's been one of the poorest performers along with Reliance, HDFC Bank from a long-term perspective. So I think this recent high that the stock saw at about 1817 is unlikely to get broken. I think it's going back to test the big support at about 1630. So a stop at about 1820 and price objective close to 1630.
All right, two interesting takes there. And you're short Kotak Mahindra Bank. What about others in the space, Jai Bala, considering that that's the story of the day, and especially the smaller ones? We talked about an Ujjivan, we talked about a Suryodaya. Suryodaya really, completely going ballistic, 9.5% up last I saw. Yeah, about 9% up now. What would you do with these counters?
See, I haven't looked at Suryodaya recently, but I would just have a broader objective here. Something like a UCO Bank, which is on the smaller bank. Think they might have a little more higher highs to come through. But my last recollection of what Suryodaya did, I think it's got highs to come through beyond March, but the stop losses are quite wide. So, you got to be quite cautious. If you're holding on, keep your March lows as trailing stops, and look for, holding them on past the 2024 highs. So they've got higher highs to come through, but it's not fresh investment process or a fresh trading process even.
All right. So, these are some of the counters that are doing very well. I just want to pull up what's happening sectorally as well in the markets right now. And your BFSI space completely dominating the winners list today, but so is IT. There's a JP Morgan note out, and they're very clear over there that they prefer your mid-cap ITs to your large players. But Infosys is definitely in one of their top picks. You're seeing the chart through the day also go up. Let's look at the components of the Nifty IT and see what's happening there. Coforge has been a consistently positively strong story. So is Tech Mahindra. Persistent is on the JP Morgan list, as is LTTS and Infosys as well. So you're seeing an interesting there as well. Jai Bala, any of these counters that you like?
See, I'm avoiding Nifty IT as a whole, and I've been bullish on Nifty mid-cap names since 2022. And I've avoided the frontline IT names, but been bullish on Persistence, Coforge, KPIT, and, something like Nucleus and Newgen and so on. But right now, the whole IT pack is coming under pressure, and 34,200 is a very important mark for me. 36,200 itself keeps the IT sector weak, but if 34,200 were given, it will mark a trend change for the whole sector. So, even the mid-cap IT names that I've been bullish on, I'm, intending to, go on a profit booking mode rather than be a fresh bullish on these names.
All right, Jay, stay on because while we've spoken about banks at large, it would be completely unfair to not talk about HDFC Bank on a day when it's actually doing well, because the last few days or weeks or months or quarters, we've talked about HDFC Bank when it hasn't done well. And the reason for this performance, maybe twofold. One of them could be the business update, to maybe, just maybe, some technical reasons as well. Harsh is here with all those details. Harsh, good afternoon. Now, just want to understand. Let's break it into two. I want to start off with the business update first.
Yes, please, Niraj. Thanks for that. So, of course, talk of the day, HDFC Bank. But let me first take it to the loan growth numbers and put that out of the way. The loan growth came in at, around the 1.6 odd % mark on a sequential basis. Within the loan growth, retail and there you go. So 1.6% sequential. Within loan growth, what's really done well? Retail has grown at 3.7 odd %. And you've also seen some growth coming from CRB, which is commercial and rural banking, 4.2% sequential. Both of these numbers sequential. And there you go, those numbers flashing on your screen. Corporate has actually degrown by 2.2%. So that's kind of pulled down the loan growth a tad bit. But that's not the relevant metric, and that's not probably the reason why the stock is buzzing. On to the deposits, 7.5% sequential, 1.66 lakh crore rupees of deposits added in a single quarter, a record for any bank. Last record also was held by HDFC, Q4 FY23, 1.4 lakh crore. So this one beats it. 6.9% on retail, 10.9% on wholesale, and 8.8% on CASA. So just a broad metric will mean that the CASA ratio has definitely improved, and it has by 50 basis points on a sequential basis. That's one. The other piece is wholesale has grown, very unlike Q3 where wholesale did not grow. Whether it can last or not is a question which needs to be answered in Q1 FY25, hopefully. Let's take it across to the loan to deposit ratio, and what you'll see is the gap has shrunk between the loan and the deposit ratio, which earlier in Q3 was roughly at roughly 112%. It's now at 105%. Of course, once it comes below 100, you'll start to get more and more comfort. Some commentary with regard to how deposit growth trajectory will continue to be, some outlook with regard to that, whether they'll continue to wholesale or not, will be interesting to watch out for. And Q1 FY25 numbers, whether it's sustaining or not on this higher base, is going to be key.
Okay. Yep. Definitely some things to watch out for. Harsh, just one very quick update. Non-results. This piece of news that we put out with the FI shareholding in HDFC Bank being what it is, does that open up doors? Could that bring about some excitement?
Well, yes, Niraj. So we spoke with a few analysts, both you and me, and what we've tried to gather is the FI holding, if it were to fall more than 3% over Q4 over Q3, and it has fallen around 4.5% when we looked at the Q4 shareholding, which was released today. It leaves open a window for an MSCI weight rejig. And if that were to happen, and if the weights were to be rejigged, of course, a $2 billion inflow could be on the cards if at all that weight gets rejigged. Not something which is absolutely major, but at this point in time, every little piece counts given the way HDFC has been beaten over the last 3 to 4 months, Niraj.
Okay, thanks a lot for that, Harsh, and that's an interesting update. Now, before we take that break, Jay, quick thoughts here. We'll have to make it slightly quick because we need to ship into a break, but HDFC Bank, what's the call?
HDFC Bank hasn't seen a correction, since 2008, or I would say COVID 2020. Those are the significant corrections. But it's got resistance about 1540 to 1580. So this is a corrective bounce back, and it's in the process of medium to long-term correction. So I wouldn't get overly bullish, but there is a trading opportunity here.
Trading opportunity. Okay. Take a quick break and wonder if there's a trading opportunity in the stock of the company that we're talking to next, because they've come out with a very strong update, or reasonably strong update. The Manganese Ore India, MOIL, joins us on the other side. Stay tuned.
All right, MOIL has been in the news, and the biggest reason, of course, has been their business updates. You're seeing it come off a bit yesterday, but if you pull up the 1 week as well, you will see that it was indeed a sizzling stock yesterday, and you have been seeing that uptick. So now what's been happening? The production numbers for FY25 have been pretty positive. So they've achieved a record-breaking production of 17.56 lakh tons. It's a 35% year-on-year increase. Sales have hit an all-time high of 15.36 lakh tons in FY24, marking a 30% year-on-year growth. The electrolytic manganese dioxide, that's EMD production, has peaked at 1413 tons, up 28%. So what's been happening? What has been the reason for these kind of a number? We're talking now to Ajit Kumar Saxena, CMD of MOIL, and additional charge CMD of MECON. Mr. Saxena, thank you so much for speaking with us here at NDTV Profit. Great to have you on. Can you give us a sense of the reasoning behind these numbers that we're seeing, which you are saying are record-breaking numbers?
Yeah. In fact, there's quite good market available for this commodity, and we started, I think last year when we met, we started with a target of 20% growth. But as things happened and we reviewed our targets, so finally we ended up at 35%, and this is a consistent review on continuous basis that what all improvements can be done. And instead of focusing on the figure, we focused on potential, what potential we have, and did the debottlenecking to achieve those figures.
What is your target now? If you revise your target upwards from 30 to 35% for this year, and you're saying you've achieved that target, your production target, what is your production target for the next financial year, sir?
This financial year, we have target of around 15%.
Sorry?
15.
Okay, for your production capacities.
For production.
Why has that come down, may I ask?
The base is... Last time the base was 1.3 million, now it is 1.76 million, 75 million.
Okay. Now, you also had a recent price hike. Can you give us a sense of the kind of impact you see because of these price hikes, and will you be seeing consistently more price hikes?
Price will be fluctuating. That's what we expect. Like the last 6 months, prices have been fluctuating, and I think that trend will remain same.
Okay, Mr. Saxena, good afternoon.
Good afternoon.
Production is one. Is just the thought of how would demand shape up, not just for the next 6 to 12 months. I know commodities are fraught with risk of longer projections. But I'd love to understand two things from you. The near-term demand outlook and what could happen over the course of the next 2 or 3 years, depending on various end-user industries that you might be currently or will be in future catering to.
Look, manganese major used in the steel industry. That is, you can say for last year, growth was globally 1.8%. This year predicted is around 1.9%. But domestic steel consumption and production is going well. And that is one green point. Another thing is that this EV batteries, what kind of use will it be there? What are the volumes? It is difficult to guess, but then definitely it will be a new field. So potential for manganese as such is quite good. And potential for MOIL within country is definitely very good, because we are importing, say, to the tune of 5 million tons every year, if I take the figures for last 4 years. So manganese as a commodity, new field is EV batteries, and for MOIL, having the country has offers a lot of potential, because domestic steel production is growing.
Okay. And what about the near term? The end user demand for the long term is great. What about the near term? Would you believe that operational metrics, which is margins as well as volumes, while you brought down your production target, but would volumes and margins stay at these elevated levels?
No, as I said, that, if I talk about MOIL, country as such is importing to the tune of 5 million ton of manganese ore every year, if I take average of last 4 years.
Yes.
So, and we are producing to that, we have produced this year 1.75 million ton. And if I plan 15% growth, so it comes around 2 million ton plus. So I have that much of market. Like last year, I have produced around we have pushed around 0.35 million ton in market. So market is not an issue.
Okay. Okay, but there's no number that you're putting out to this, or both in terms of margins or the growth for the next 6 months?
Growth, as I have said, we are starting with 10 to 15% this year.
Okay, and margins, Mr. Saxena?
And as margins will, I think, they will be like this year.
Okay.
There will be a growth of around 8 to 10% also.
Okay. I have one more question, which is this JV that you formed with GMDC. Now, what is under the anvil of this JV, and when does it start the business that it's supposed to, and what kind of addition does it do to your overall business opportunity?
Sources of around 9.5 million ton or so. So as we start little add to countries' manganese resource, so there is quite good potential, and it is in quite advanced stage.
The other thing which really struck me in your business updates, Mr. Saxena, is that you've achieved the best ever production of EMD, up 28% year on year. Now, this is, of course, an import substitution product. Can you give us a sense of what is the potential here? Do you have a target in mind for, production improvement for the next year, and where the potential use cases can increase?
It's a very old plant and having capacity of around 1,500 tons a year. And this year we have achieved for 1413 tons. This year I'm expecting, we are targeting around 1550 or 1600. So achieving a capacity of more than 100%, maybe 107, 108%. This is what we are targeting.
So you're saying you're expecting a capacity increase of 100%?
No. With same capacity, achieving more than 100%.
Okay, you're hoping to achieve more than 100% target this year.
Because last month we have produced almost, you can say, 10 to 11% more than what the capacity, monthly capacity is.
Okay, so you are going to up that to 100%. All right, got it. Just going back to one of the points that you made on, the EV application. And battery application. Is there any business there right now, or is this something in the future?
There is something in the future.
Okay, so nothing right now. That's a potential application you're saying.
Yeah, and one thing I would like to add, other than these production figures, this year we have explored around more than 87,000 meters. We did for exploration for ascertaining the resources, which is more than double the best figure. Last year we did 41,000 odd meters. This year we have done the exploration of 87,000 meters. So, by the exploration you ascertain how much resources are there in the country of manganese in different areas. So that is one aspect which is really remarkable, more than production figures.
Okay. Mr. Saxena, one final question. While you're talking about 10 to 15% numbers, various estimates say that you could grow the EBITDA from 470, 480 crores in FY24 to maybe 800 to 850 crores by FY26. Is that possible?
That is difficult to comment because EBITDA percentage, if I take last year it was 31, now it comes around a little more than that, maybe 3 to 4%. So that much of jump with price fluctuation, it is very difficult to estimate right at this stage.
Okay, fair call, understandable. So, and yeah, it is a volatile world, so difficult to kind of call it right now, and completely understand. We'll leave it at that. Thank you so much for joining in and giving us your thoughts. Really appreciate your time. Well, that's MOIL, but I must say most of the metal counters, while today may be a bit off, largely have done well. Bala, quick thoughts here. Any metal stocks, large, mid, small, that you would initiate fresh trades on?
Basically, most of the base metals are on a rally because the commodity that's driving them are actually seeing a rally. So there is some short-term upsides to work with for SAIL and even Hindustan Copper. So those are the short-term bets that's attractive for me. But they remain short-term, not investment or medium-term. Hindustan Copper in particular, and I can position yourself with a 290 stop for objective close to 360.
Okay, let's take a quick break on the show. On the other side, we will get you a deeper dive into the chemical stocks and others. Stay tuned.
All right, Nifty off its gains of the day. Let's pull up the intraday as well. Market still holding up, but now coming off in the last few minutes, as you can see from that intraday chart. The pressure area is largely, I would say, from the oil and gas pack, more than anything else. Those aren't doing too well. We'll pull up the Nifty components and the contributors just for a sec to see what's happening there and where that pressure point is coming from. RIL. This windfall tax numbers has not really quite had the impact expected perhaps for an ONGC and an RIL. HPCL is down, so is Oil India, IOC, the whole lot of them. Either way, has that midday recovery really helped derivative traders? Agam is standing by to break down the cues.
It's been a very interesting one, considering the way things have panned out for the benchmarks right now. The Nifty, we started off on a life high, eventually came off by around 200 odd points, and once again a recovery. And now it seems like once again Nifty is inching back towards 22,500. That's likely where we are expecting to see the expiry come through, 22,500. At the moment, we're seeing a little bit of unwinding. gain to the tune of around 1.5%. The Bank Nifty, of course, advancing on the back of HDFC. HDFC, of course, is looking at a 2.8% growth coming through and we've seen unwinding there as well. This is about a short covering. That's clear as far as the Bank Nifty is concerned. Moving on to the options market, it's been a very, very choppy session for the Nifty. We've seen how things have turned substantially through the course of the day, and because of that, 22,500 and 22,600 were the two key levels that we were watching out for. Of course, we hit 22,600 for the first time ever on the Nifty, and that will always be a big positive here. But that also, brings into perspective as to where the next level of resistance is. And it's likely to be somewhere around 22,800 and 23,000. Now, moving on to stocks. Well, let's bring that list up as well and see where things have changed. Ipca Lab, Exide and LIC Housing Finance are in fact looking at longs, and shorts for Dabur and India Mart. And of course, about a short covering for M&M, Cholafin, L&T and Nalco. So all in all, it's been a relatively positive day considering the sharp recovery that we've seen towards the end of the day. But, it's the Nifty expiry, and it does seem like the session isn't over yet. I'm sure there's plenty more installed over the course of the next 20-odd minutes.
Yeah, and remember, tomorrow is going to be an interesting day. You have policy as well coming up. No real change in cuts expected at all, but directionally, it'll be interesting to see commentary. Are we going to wait? I think I would be interested to know and keen to know in that press conference, does Governor Das, and I'm sure that question will be asked, are you going to wait for Powell to make the first move? Is India on its own track? Because Mr. Powell doesn't seem keen on even a June. So we also seem to have a similar problem. Inflation is not necessarily coming down. Growth is looking great.
Yeah, and something that he's reiterated in some sense in the past, so I don't know if it's this time around might be different as well, Tamanna, you're right, that whether he kind of toes the line of what the global central banks do. They've mentioned in the past, Michael Patra also has that the eye on the globe to figure out what happens there, but it could be interesting to see if there is a change of tone tomorrow on the growth side, because Indian PMI numbers are looking, manufacturing PMI is looking so strong. It'll be interesting to see what they say on growth.
Yeah, I think, growth estimates will definitely go up. But so will inflationary estimates, and that is kind of going to go hand in hand. Remember, the RBI was happy enough to depart from what was happening globally during COVID. We danced to our own tune, so there's no reason why we wouldn't right now. Anyway, there's a lot to talk about today. It's been such a buzzing day, and another set of stocks that we're going to talk about is specialty chemicals. We'll have a special guest in just a few minutes from now, as well as my colleague Varsha, who's standing by, talking about why we're seeing this buzz today in an alkyl amines and a Balaji amines. What is the story behind this, Varsha?
Hi Tamanna. So amine stocks are in focus today. If you see, alkyl amines have seen an intraday high of 11%, while Balaji has an intraday high of almost 8%. Now, why all these amine stocks are buzzing is, one reason is the government has initiated anti-dumping duty for acetonitrile. Now, this is a specialty product for Balaji amines as well as alkyl amines. Now, how Indian companies or how Indian amine companies will benefit is, the price at which India imports acetonitrile is less than the raw material required to make that product in India. So this anti-dumping duty will actually benefit Indian amine companies. And the other reason why these stocks are buzzing is the acetonitrile capacities have been impacted in Taiwan due to the earthquake that we have seen. But one needs to understand whether this will impact for a long-term or short-term basis, because now I don't think so. I mean, this won't impact positively to Indian amines companies if Taiwan comes back quicker, as all the players will already have inventory on their balance sheet. But if Taiwan takes long time, then maybe some Indian companies will benefit, as buyer will have to fill up those inventories for a short period of time. Also, just speaking about the growth prospects of alkyl amines and Balaji amines. So Balaji amines have capex for greenfield project, which is going to be live on FY26, and alkyl amines is going to do capex of almost 150 crores for FY25. And all these new products by Balaji and alkyl will be import substitute products, which will help to aid margins. And So if you see Bloomberg estimates, revenue estimates for Balaji Amines, so the FY24 revenue can be around 1600 crore followed by 19% of margin, while revenue for Alkyl Amines is estimated at around 1400 crore with EBITDA margin of 17%.
Okay, thanks a lot for that. So lots happening in chemicals. The amine stocks up and active. There is also some talk of phenol prices having gone up. Let's talk about all of that with Rohan Gupta, Director at Nuvama Institutional Equities. Rohan, good having you. Thanks for taking the time out and being with us on NDTV Profit. This is Niraj here. Good afternoon. What are you observing within this space in hibernation for the last couple of years, at the very least, if not longer? Are things changing at the margin for select chemistries?
Hey Niraj, hi, good afternoon. Yeah, sure. The sector has not been so limelight from last 4 to 5 quarters. The reason being has been multiple low demand, inflation scenario in US, Europe impacting demand. And the most important was the destocking across the place while China was continuously putting pressure on the prices. So yes, a lot has gone through in the sector in last 4 to 5 quarters, but now it seems like the things are normalizing. Most of the companies, in my view, have in terms of earnings have bottomed out in Q3, and in my universe under coverage, we are expecting that most of the companies are going to see sequential recovery in top line as well as on a bottom line, except maybe a couple of names which may still continue to report lower earnings. Rest of them, we see that the growth is in place. Now, the big question is that whether this growth is sustainable. I think that most of the companies after their results are going to share the positive commentary about the business environment. Some of the chemical prices we see have already started going up. Demand scenario has already started picking up, except agrochemicals, where we see that global inventories still remain a key concern. Apart from that, I think that some of the end user industries have started showing the sign of improvement. So yes, over next 2 to 4 quarters, we see that the growth prospects for most of the chemical companies, mainly specialty chemicals in nature, are looking better.
Yeah. Hi, Rohan. Good afternoon. Tamanna here. Now, specifically on the Taiwan earthquake factor, and Varsha spoke about it, where production capacities have been hampered, that could be contributing to the stock movement we've seen today. So that's one of the factors. Isn't that going to be, in the short term, not really something that will continue? Because I was just seeing a Moody's report right now as well. The areas where the earthquake has taken place is where you see largely tourism, not so much industry in Taiwan. So what do you make of that one factor?
Yeah, Tamanna, your points are valid, and that's what we are also understanding from our chemical companies to whomsoever we are speaking with. We do not see any very, very significant impact as of now on any of the chemicals. It will be only here and there, but most of the chemical plants which are important and have size, they remain unaffected by this earthquake. Apart from that, we see that it will still be probably more of the news flow driven rather than real disruptions on the products or the supply chain. So I do not see that in a near term it is really going to have any major impact on the pricing environment. Rather than, we are still very closely watching how China, after reopening after the new year, how they play, how the pricing environment pans out in China in month of May. That is more important. If demand globally doesn't pick up much, there is a concern that China may still, Chinese supplier still may dump the prices, how exactly it has happened last year. In the month of May, June, with the weak demand, the Chinese players dumped the prices, and that have started the lower margin trajectory for most of these companies. So we are more worried about that rather than this earthquake issue in Taiwan.
When will you have visibility on that factor? Because if we are talking about a recovery in this sluggish sector, from what you're saying, Rohan, it seems the biggest headwind is yet to play out, which is a competitor, large competitor like China, ready to dump again.
Yeah, Tamanna, so you are absolutely right. But as I said, that the scenario is completely different what it was last year, when every company or every end user industry last year was in mood of destocking because the prices were falling, global interest rate scenario was rising. So none of the end user industries wanted to keep the inventory, and neither any dealer distributor. I mean, destocking was taking place across the value chain, supply chain. Now the scenario has reversed. However, we are still not seeing sign of restocking or very solid restocking that may spur the demand. But destocking scenario, in our view, is broadly taken care or over. So now from here on, the supplies and demand are matching, and that's what is going to make the sector stable. If restocking happens, then probably we may see that the scenario can pan out much more favorable than what most of the analysts are expecting. But as of now, we are predicting a normal scenario while the destocking is unlikely to take place now on because the industry has normalized already.
Rohan, my final question is on what's happening with some of the other China-linked commodity chemicals, if you will. Like I said, and I don't know if you referred to this and maybe I've missed it, but if you haven't, this talk of phenol prices having moved up, a couple of other commodities came into play as well. Just wondering if China data improves and if production/consumption of some of the commodities moves up, phenol, for example, or some others, could that be net positive for Deepak Nitrite and some of the others, which might be involved in either phenol or other chemistries?
The key raw material for most of these raw materials or commodities are definitely crude. You have already started seeing some positive movement in crude. So I think that the phenol prices is also slightly reflecting that the crude price momentum. But as far as the commodity chemicals are concerned, we see that the prices are broadly likely to remain here and there, maybe 5 to 20% range up from here, but maybe a couple of products we may see some muted pricing environment also. But it will be broadly chasing the crude prices. That's what generally happens. Prices are unlikely to fall in the commodity chemicals. Benefit to the players like Deepak Nitrite and all, we have yet to see because for them raw material prices are also going up. So what we need to closely watch is the spread, how it is going to pan out. But yes, a stable price scenario is actually helpful for or favorable for everybody, whether it's the raw material, whether it's the end user industry. So what people don't like much is the volatility, and the prices remain stable, then we can expect the margins or spread for most of these players, including even name like you suggested, like Deepak Nitrite, should be favorable only.
So, Rohan, in the lot, what would be your strategy for some of these companies? What would be your favorites?
So, Tamanna, I will be still looking at companies who are not too much dependent on agrochemicals because agrochemicals still may have some, maybe 1 or 2 quarter weakness may continue. Global demand environment still remains weak and inventories are still there. Consumption-led sectors, so we are more positive on FMCG linked specialty chemical players like names like Galaxy Surfactants, players like Gujarat Fluoro, which are the stories on emerging fluoropolymer story or demand scenario. The companies who have already been invested in capex like Aarti Industries but have been impacted because of the low demand environment, they should see the benefit of operating leverage. So these are few names like Aarti, Gujarat Fluoro, Jubilant Ingrevia, or maybe Galaxy Surfactants. These are the names which we are more positive on in a near term.
All right. So Galaxy Surfactants, Gujarat Fluoro are some of the ones which they're more positive on.
Aarti Industries also.
And Aarti Industries, of course. Thank you so much, Rohan. Great to speak with you. And, just get that perspective on what is happening in specialty chemicals, a space which is definitely buzzing. Very quick break. And we're right back. We're talking about OMCs in focus. Kotak maintains a sell rating. What do you do next?
Actually, before we take that break, can I just ask Jay, Bala for 1 or 2 of these stocks and what they are doing?
Yeah, of course.
So, Jay, can we talk about, let's say alkylamines or a Balaji amines, which are, both of them are up and about in the session today?
We can even talk about Indoamine, even that's also looking good, and, most of these alkyl names have had a very poor run from 2022. And this, even if we consider this as a counter trend bounce, they could still have some 15 to 20% counter-trend bounce upside to be worked with. So that's a reasonable tradable bounce for short-term traders. But of all these three, I think Indo Amines looks best. Next is Balaji Amines, and the last is Alkyl Amines. Although Alkyl Amines is the biggest gainer today, but the order of strength, or rather reversal capacity, looks actually the reverse. So watch out for these three names. They have a possible tradable bounce here.
Mm-hmm. Okay, watch out for this. And not as much, but Alkyl Amines and Balaji Amines certainly on very strong price and volumes.
All the amines
have done.
That's my favorite line this afternoon.
Yeah,
all the amines are doing well.
Yeah. Well, okay. I had a very morbid line to that, but I'll pass it for another time. For now, let's talk about the good news or other newsmakers. So Indian OMCs are certainly in news. Kotak maintains a sell though on Indian Oil, Hindustan Petroleum and Bharat Petroleum. The stocks are down today as well. Mihika joins us with the rationale behind this downgrade. Mihika, good afternoon.
Yes, so Kotak has maintained its negative view, a sell rating for all the three OMCs, with Bharat Petroleum with having the highest downside of lowest downside for Bharat Petroleum at 8%, and for Hindustan Petroleum is the highest at 48%. Now, even though recent earnings have been strong and the debt has concerns have been reduced, the OMCs lack the freedom on 80% of sales in their volumes, which is petrol and diesel, and this is a key concern that Kotak states. Now, in the past few years, the OMCs have also surprised with strong reported gross refining margins. Now, Kotak states that while there are certainly benefits from capacity upgrades, efficiency improvements, policies, etc., the reported GRMs seem to be too high and seem to be too good to believe. Now, according to their calculations, the gap in the reported gross refining margins versus the estimates based on the product slate that they have, this has widened. And they've also spoken about the benefit of Russian crude imports. Now, Russian crude import benefits the highest for Bharat Petroleum, but the least for Hindustan Petroleum. And they've also lastly stated that marketing margins on the non-transport fuels have recovered from the FY23 levels.
All right, that's Kotak's view on OMCs, and OMCs in a world of pain today. Jai, Bala, anything that you're spotting here as an opportunity to pick up at this level, or you would just stay away?
I'm bullish on most of the petroleum names, and I've been pointing out last week too. MRPL is actually looking pretty good. It's got an unfinished up move, possibly the biggest beneficiary of crude movement. And I've been bullish on crude since the beginning of March. Probably it's got something to do with it. I'm not a fundamental guy, but I think they've still got much upsides to work with. I'm not that confident about HPCL and BPCL, but I'm pretty confident about the smaller names like MRPL, Confidence Petroleum, and IG Petroleum. They still got short-term upsides to work with.
Okay, what else? So just let's look at the stocks on the BSE 500 which have done well. LG Equipment has a pretty strong move for itself today, as does Jubilant Pharma, Aster DM. So select healthcare names are doing well too in the session today. Lo behold, Zomato is back to those 187, 188 levels. So that too has had some good move. And while we talk about Adani Enterprises, Adani Ports and some of the others, I think one which is really made a strong move is Adani Power. Now, I might be wrong here, but let's pull up the 1 month chart of Adani Power. It's up another 4% today. Day before yesterday, thereabouts, it was up 5% as well. The last 1 month, it's gained about 15%. More importantly, the last few days, a large portion of this up move has come. So, a bit of a recency out here, Jay, on Adani Power, particularly out of the 9 or 10 listed companies of the Adani Group. A standard disclosure, of course, they own NDTV as well, and you're watching NDTV Profit. But Jay, Adani Power in particular.
Yeah, very strong momentum, but I don't know if it's tradable. I don't know if the circuits have been lifted from 5%, or it's still got limited. But the momentum is pretty strong. I would think that it's got capacity to push to as far as 725. So the tradability is something what regular traders can evaluate, but from a charts and technicals perspective, it's still got very strong momentum backing it.
And Jay, what would a top closing strategy be then?
Yeah, I would do a BTST on IPCA Labs. It's one of the strongest names and in my favorite sector. A stop loss of about 1240, and I would expect the stock to bump up at open tomorrow, so traders can use that to book profits.
All right. So IPCA Labs is one to watch out for. Now, we keep talking about investment and what stocks you can buy, what stocks you can sell, what you should do before the elections. But what about what the netas are doing with the stock market? And some interesting data that has come up today. Rahul Gandhi filed his nomination, and as part of the nomination disclosures that anyone has to make, they have to talk about all of their assets. So no car or a house, but various bets in the small and mid cap space is what Rahul Gandhi seems to be betting on. And Alex has put together this interesting piece of what is the portfolio of the Congress leader. Alex?
Absolutely. I've focused on the movable assets rather than the immovable assets. So total wealth of about 20 crore rupees, of which immovable assets is about 11 crore. The movable assets, which includes equity, is about 9 crore. So let's pull up how this is broken down into. Right on the top of the list, you'll see equity of 4.3 crore. These are individual stocks, and that includes a portfolio of 24 stocks, most of which are large cap. I'll come to that in just a bit. There's also mutual fund holdings of about 3.8 crore rupees, sovereign gold bonds of about 15 lakh rupees, physical gold to the extent of 4 lakh rupees, and a public provident fund, which I would hazard a guess and say that it's been running for quite a while, stands at about 61 lakh rupees. Let's delve a little deeper into the stock portfolio. It has 24 stocks, like I said. The top 10 holdings account for about 2/3 of the holding. And the top stocks are Pidilite, Bajaj Finance, Asian Paints, Nestle India, and Titan. Now, there's also an interesting play on the mid-cap and the small-cap space that is evidenced by the holding in the mutual fund space, because the top holding is in HDFC Small Cap Fund, and there's also a holding of HDFC Mid Cap Opportunities Fund. And by the way, there are a couple of hybrid funds as well. So seemingly, Rahul Gandhi getting good advice on the mutual fund front. There is also a sizable amount of small cap in his stock portfolio. 20%, in fact, of his stock portfolio is in small cap. And which of those stand out? You have the likes of GMM Pfaudler, Garware Technical Fiber, there is Moltech Packaging, Suprajit Engineering, and Fine Organics. Also, Alkyl Amines, which is up 10% today.
Alkyl amines is something that we've been talking about as well. And interesting that at the end of the day, the slow and steady investment advice is something that everyone has to follow. So thank you for that, Alex. And, at the end of the day, no matter what your politics is and what you say as political slogans, we all love money.
We all love money. We've been saying that from day one on NDTV Profit.
Little plug there for the channel sort of,
yes.
momentum. All right, as we go into the fag end of the closing session for today, of course, the big story tomorrow is going to be, at least in the first half, what the RBI governor says. We'll get a fundamental view on that a little ahead, but Jai Bala, meanwhile, anything in the real estate, I'm thinking of rate sensitive, so anything in the real estate or passenger vehicle, two-wheeler space that you would be looking at positively on the charts?
See, real estate has been on a tear for some time now, and it's come to a significant resistance. And Nifty Realty Index has got resistance at about 940. And the recent high is also very close to it. And if you want to be there, it has to be DLF. DLF is the strongest and it's the biggest one that's driving it. But I'm not completely sure it's got much more upsides to work with. But I will maintain a stop loss at about 820 and hold on to DLF. But if 820 breaks, I think the top is done for it.
Mm-hmm. Okay. So that's... real estate, and Tamanna has been talking about this now for the last couple of days about how there has been a bit of a pullback in some of those realty names, save for maybe a Prestige Estates, which has maybe done reasonably okay in trade. Jab, one final question, and that's on tech, which is largely done okay today, and aside of HDFC Bank is kind of leading this charge. Could there be more in store, or are they reaching some resistances?
Yeah, if there's more in store, it's probably got to do with TCS, not Infosys. And Infosys has actually signaling that it could be 34,200 that gives way first. And if I'm wrong, it'll be because of TCS. And TCS, has probably got little more upsides to work with, but within the frontline IT names, TCS and HCL Tech is better than Infosys and Wipro. So so if you got to be bullish, be bullish on TCS and HCL Tech rather than Infosys and Wipro.
Okay, Jay. The other thing is, while we've spoken a lot about gainers, which have done well in trade, there are arguably stocks which have come off reasonably strongly in the session today as well. I mean, we were looking at the kind of losses that OMCs have had, and we've spoken about that. ONGC is the one that I want to talk about, and Dabur is the other one. Views on these two before we start wrapping up.
See, the FMCG sector is one of the weakest, and it's got a lot to do with raw materials, and raw materials prices have shot up through the roof from the beginning of the year. And when it comes to ONGC, I think it is in a topping process, but I'm not completely sure it's topped out. But I will maintain a stop about 249 for ONGC. As long as it's above that, I think the trend is still up. But there is elements of caution and slight red flags flashing for ONGC. But keep 249 as an important bull bear divide level. So that's the level I'm watching for ONGC, and tech, and we already spoken about it.
Yeah, absolutely. Thank you so much, Jay, for joining us today and throwing light on all of your top picks for tomorrow. It's definitely going to be an exciting day. So thank you for that. Now, just about a minute odd left for trade to shut today, and we should really pull up the intraday of the Nifty. We're ending about 0.5% up. But remember, you started the day on a complete high note. You had a record high right up the day. So it's a bit of a seesaw, I would say. You started at a high point, briefly hit 22,600, had a bit of a midday slump and then a recovery. So you've seen that kind of a trade today, largely positive, I would say. You're still going to likely close over 100 points up on the Nifty. But I'll pull up the heat map and show you what has been driving the markets. If there is one hero of the day, it is HDFC Bank. It's all about HDFC Bank. In case you missed it, what happened is that HDFC Bank came up with its business updates. And remember, this was the stock that really got pummeled last quarter because of the kind of numbers that they put out in their business updates. That seems to have dramatically improved, at least on the first cut. Their deposit growth quarter on quarter is seen as quite positive. That's why that stock is closing about over 3% up. Now, when an HDFC Bank moves like that, you are going to have a positive move on the markets. Titan, of course, doing well. But then I think the other big story of the day, apart from HDFC Bank and a clutch of the smaller banking names, has been completely IT. IT roaring back, whether it's a Tech Mahindra, an LTIM, TCS about 1.5%, over 1% up. All of them doing fairly well, even a Wipro 1% up. On the losing side was ONGC. Now, not just ONGC, even an HPCL, BPCL, if I'm talking about windfall tax effects or what you may have it, but ONGC has been the big loser of the day. Can we pull up the Nifty contributors very quickly in terms of how much impact they've had? And look at that, nearly 80 points just coming from HDFC Bank. The laggard over here was a Bharti and a Reliance, really. So between HDFC Bank and TCS, they pretty much handled the show pretty well. Let's look at the advanced decline ratios and just give you a sense of how the trade of the day was. And look at that pattern, completely a crisscross there, ending in the positive, but not too much of a gap. I would say it's closer to even Stevens than one would expect. The broader end of the markets, though, have relented today. For the last couple of sessions, you've seen the broader end of the markets do much better. That was not the case today. The Nifty mid-cap just about flat. The small cap also, that's about less than 1% up. In terms of stellar standouts, we've talked about alkyl amines, Balaji amines, that's specialty chemical names, a Suryodaya, SFB, a small finance bank, or other small finance bank names have also done pretty well. And these were some of the big, that's about 11% up at close. So those were some of the stories. What is dominating the markets right now? Business updates, getting rewarded if they're good and getting penalized if they're bad. Dabur was one of those stories as well, which I think must have ended about 3.5–4% down. So those were some of the stories that we saw at play. But tomorrow is a new day, a big day in terms of market cues. You have the monetary policy announcement by the RBI governor, and you know where you have to tune in to get all the latest and much more. So stay tuned to NDTV Profit.
The job is not yet finished, and we need to be vigilant about new supply shocks that may undo the progress we have made so far. Recurring food price shocks could interrupt the ongoing disinflation process, with risks that it could lead to de-anchoring of inflation expectations. Monetary policy in the midst of these lingering uncertainties has to remain vigilant to ensure that we successfully navigate the last mile of disinflation. The Reserve Bank judiciously uses micro and macroprudential tools to safeguard financial stability. We do not wait for the house to catch fire and then act.